Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 9th of January. Now, let's just have a look at what's going on with the major currency pairs. And, I mean, unless you're a little bit on the visually impaired side, you'll see that there's very little going on. There's a few little bumps here and there, but generally speaking, the major currency pairs are in a state of, well, not necessarily shock, but they're just trying to work out what's going on. We are lacking major data. If anything, dollar CAD with oil pushing back over 50 bucks is the only pair that really has like something driving it. The rest of the currency pairs are just sort of banging about with little bits of data coming out here and there. Now, Euro drifted a little bit lower yesterday after the industrial production numbers were weak, but once again, it's straight back to exactly where it was previously. And that goes for Aussie, Kiwi, Euro, Sterling, dollar yen as well. The whole hype around, let me just bring you over to the news, the whole hype around this, potential US-China trade deal is actually somewhat bit of a media hype. Some signs of progress. That'll change in about a heartbeat once Trump opens his trap. But the rest of the news, this is pretty hard work for Reuters to start bringing out sort of fresh news when nothing's actually moving, right? If I bring you back across to the major pairs, let me just change the screen there. You'll see that, basically there isn't a hell of a lot going on. Now, my news thing has just gone on the blink just for the moment. But, so just looking at the various aspects of the market now, equity markets, still having a pretty good ride on the back of this. This is, I think, to me, part of the Fed just going a little bit neutral, okay, going to a neutral stance. The equities are liking it. Obviously, the hype around media around China and the US potential trade deal is also adding flavour to the whole spectrum there. So, like yesterday, Chinese equities were lower. Now they're back. You've got obviously US equities up and Australasian, Japanese equities also up. So that's a pretty good sign for investors. The Eurozone numbers, as you see here, the industrial output, business climate, and even the economic sentiment, the Eurozone numbers were all pretty weak, but that did very little for the dollar. Now, looking at the US dollar index, okay, we had that little dip lower yesterday, which sort of signaled a bit of a bearish move. Now, that hasn't changed, okay? What we've got is we've got a nice sort of resistance line on the top side there, just taking shape. Let's just get on the top. So a bit of resistance back here at 96.10. But the way the euro is moving there, you got to think, well, this sort of price action is pretty indicative of a lack of momentum, a lack of direction. We're really waiting for the next major US number to really get things going. And here's the move. Like yesterday, these trades, news about the potential trade deal with US and China have been on the news pages for some days, all week. But we saw China weaken yesterday. Today it's strengthening, so I can't work that out. It should have strengthened yesterday if it was a real situation. If dollar China does continue to fall, you'd expect Aussie and Kiwi to rally, but they aren't really going anywhere either. So when I come back to sum it all up and you have a look at the, this is where we do sum it all up in the MyFX Trading Hub. If you're just having a look here at the, where things are going and what's happening, okay, markets are back to full liquidity. Yep, that's right. That's probably why they're sort of sitting still at the moment, because there is no major direction for the US dollar. The major pairs down here, the outlook really hasn't changed. If anything, it's probably slightly bearish, the dollar across the board. But the other pairs, as you can see, are really not going anywhere. Okay, so this is like a bit of a flush out of the US dollar. Dollar yen pulled up stumps. Dollar CAD to me is the pair that has oil driving it. The rest of the pairs are sort of just technical moves lower, and that's a little bit risky to get involved in those situations. Now, where to from here? Okay, so we've got the Bank of Canada today. It looks like they are like a 0.25% rate hike has been factored in, but they're expecting them to go back to some sort of neutral stance. It will be a very interesting release. Now, don't forget, the press conference is 15 minutes after the interest rate decision. So you'll get the interest rate decision, you'll get the statement released at the same time, and then you'll get the press conference, which could be somewhat different to their earlier decisions. We'll have to wait and see. Then you've got Carney speaking. Bank of England Governor Carney speaking, and then the FOMC minutes as well. So we've got a few things to mull over, and it's all central bank stuff. So potentially pretty huge, right? Anything to do with the central banks is important. We've got 1, 2, 3 releases coming up, which all could come into play. Now, what I would like to see is some clearer decisions or announcements out of the FOMC that would give all the major pairs specific direction, whereas the Canadian release will be very specific for dollar CAD and the CAD crosses. All right, so don't forget, the US numbers are a little bit more important, but today, well, it's all down to the Bank of Canada. And that's pretty much it, guys. There's not much else going on. So if you are looking for a trading opportunity, just sit tight, be patient. We'll have good trading opportunities coming up, but right now, there's not a hell of a lot to get excited about. All right, guys, we'll see you in the 247 trade zone. Cheerio.